If you own a business and you either want to buy commercial real estate or purchase another business with zero money out of your pocket, I'm going to show you how to do that today in this video. My name's Ryan Stewman. I'm the president and CEO of Closer Capital, where we help business owners like you get access to the capital that they need when the banks tell them no. That's my specialty. I've got 21 years in finance. I've put almost every kind of financing deal that you can think of together. And on this channel, I share that experience and expertise with you. Today, I know that in 2025, the big buzz right now is the boomers are going out of business. We got to buy their businesses from them. We got to take them over and we can run them more efficiently with social media and all that. I know everybody's selling those seminars and courses out there. But what most people don't realize is that if you don't get owner financing on a business, then the only other, besides cash, the only other option you have is to go take a loan out. Most people will go apply for a loan with the Small Business Administration, the SBA. And the SBA will typically want 10 to 20% down. So look at this. Let's say that you run a business and your business is doing $2 million a month top line. That is revenue. That's not your net profits, nothing to do with that. Let's just say that it's doing $24 million a year. So let's break this out here. $2 million per month equals 24 million per year. Okay. So you're doing $24 million a year in your business, top line revenue, and you want to purchase one of your competitors. And your competitors, they're not as big as you. They're smaller. You just want to grab up some of their market share. And they're selling their company for, let's call it $2 million. Okay. So you're going to go apply for the SBA if you're not going to go pay cash for it. And the SBA is going to make you put 10 to 20% down, depending on your financials, your credit, the type of business it is, and other factors. We do SBA loans here all the time, and we see a lot more 10% down requirements than 20%, but occasionally somebody could have some challenges and need some additional capital in there for the government to feel good about funding it. But here's what most people do. They go out and they say, if $2 million, if I've got to put $200,000 down at 10%, or at 20%, it is $400,000 down, okay? And they can go out there and they can put their own money into this, right? But if you think about it, let's say that you're putting $200,000 down, that's $200,000 after tax, after paying your employees, after paying your cost of goods, everything else. So that is a $200,000 that you have left over that's actually probably $400,000 in actual value to you. And what I mean by actual value is before you paid taxes and everything else on this to have $200,000, it probably started out somewhere around $400,000, right? So you had to make $400,000 in profit in order to have $200,000 in cash laying around. Now, I say that because this could be a $24 million a year business that only has $2 million a year net profit or $500,000 a year net profit. So don't let the top line fool you. I'm just talking about that for revenue reasons for this video. Now, back to this here. So they want $200,000 down. So the purchaser in this scenario would come up with $200,000 cash. But here's how you can get into this with zero money out of pocket so that you can preserve your capital and put the onus of the debt on the banks, because debt is tax deductible and debt isn't taxed, right? So like when I say tax deductible, that 200 grand used to be 400 grand. If I give you a $200,000 loan, it's still a $200,000 loan. It has interest attached to it, but interest is never as high as the tax rate, okay? So let's shrink this down. Let's do an equation over here. We're going to buy a $2 million purchase price. We need 200K down. That will leave us with a $1.8 million loan with SBA. So we need $200,000 down. What we do typically is we will help the business owner secure either a line of credit or a merchant cash advance. Okay, so line of credit or merchant cash advance, which means that we give you an advance based on the amount of revenue that you bring into the system. So a person could borrow the $200,000 at 15 to 20%. because those are normal interest rates right now. Your SBA loans right now are 12 to 18%, by the way. The days of 7, 6%, all that's an illusion from 3 years ago, just to put that in 2025 perspective. So you're borrowing money, the 200 grand from a merchant cash advance based on the asset of this business. Then the SBA is loaning you $1.8 million to purchase another business. Therefore, you had no money out of pocket because we can stack two loans together. One loan for the down payment, one loan for the actual business. You've got the owner bought out of the equation, so there's no need for owner financing, owner interruption, or any of that stuff. You own the thing wholly. And the great thing is a line of credit or an MCA loan with Closer Capital doesn't report on your personal credit. It doesn't have recourse against your company against it. So it's just a cash infusion for you to have as a down payment. Now, you can make these numbers, you can increase them, you can decrease them, you can play with them in your particular scenario. But if you're out there looking at buying a commercial building, at a commercial building, you have to put 20 to 25% down, right? We can get you a 20, if you have the revenue, we can get you a 25% line of credit or cash down to be able to get into a commercial building to expand your business at 100%. So that's why you want to work with someone like us at Closer Capital. My team of experts are the people that you can tell the truth to. You can tell us what you're really trying to accomplish. And look, we're not going to help you commit fraud. We don't do that. We're not going to get you to lie to the banks, but we are going to advise you on the best way to achieve your goal legally with the right trail of paperwork and the right stacking of loans or whatever we have to do to get the capital that you need. It's called creative financing, and we are innovators leading the industry. So if this is something that you're looking into and you'd like to get a business or a commercial property, or if you're just looking to get a line of credit or a cash advance for your business in general, then you can go to closercap.com. That's closercap.com and just fill out the application. It'll go to one of my funding experts that works on my team, and they'll be more than happy to assess your situation, advise you, and help you achieve your goal. We look forward to working with you.